is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and plan for a better trade for the next day. So we had a volatile and a flat expiry that happened today, and the previous swing low on the Nifty is breached. More downside is expected. Let's analyze the charts and try to find an answer to that. Right. So here we have the weekly charts for the Nifty and the Banknifty, just for reference. It's the trend line from where we broke out and hit the new all-time highs and then retrace completely and then just consolidating on the edge. Same thing, Banknifty. We had broken out from the surrounding pattern or the wedge or the trend line resistance and then made multiple all-time highs and then fallen back there and then consolidating and deciding right what to do next. Let's get into the daily charts, which you're all interested. Here we go. So we had breached the previous swing low and then have a new swing low of 17,761 today. It's a hammer candle. Hammer on the bottom of the trend could indicate there is a reversal from here upside. There is a possibility that is confirmed if the price moves above the previous candle's high. So the hammer is seen in the Banknifty also. So that also indicates in downtrend there is a possibility that it can reverse from here. And it's at a great support. The retesting of the previous swing low is not breached in the Banknifty yet, but in the Nifty it got breached by a few points and it bounced up from there. And so change in polarity bounce is possible, right? Lower low, new lower low is formed, right? New lower high is breached only at 18,262 and then 475 that zones. Only then we can think of intraday. Other than it's either big bearishness or consolidation at this level. Bullish bands are not showing consolidation again. Yesterday it is again expanding, started to expand on the downside, which indicates some bearishness to come. Same with Banknifty also. Bullish bands expansion on the downside has happened. So we didn't lose. It was a flat close to 0.21, 37 points only we lost. But Nifty we lost 0.36, little more, but still flat, 50 points down. Hammer pattern on both indices. Intraday it was very volatile. It first gave up 1% on the Nifty, on the Banknifty and near to that 0.7%, 70% in the Nifty and then reversed and then went volatile in the mid of the day and then finally managed to gains back whatever it had lost initially to some extent and then closed flat. That's what happened intraday. It was volatile in the mid of the day. If you just look at this, it will be clear. And it went down 1% and then it was kind of in between. There was a flat and then breakdown, so it was of a non-directional, especially here in the 15 minutes you see went down and then reversed. Not completely, most of it losses will retreat. So otherwise we have a head and shoulder that we have seen already yesterday on the daily charts. You can see that if you put this line, you have this neckline of it, head and shoulder is there, so that is breached now. It's a confirmation. There is another bearish indication that it can further go down. Descending wedge, lower low pattern, bearishness, new swing low breached, old swing low breached and new swing low bearishness. But CIP change in priority, trend line support is there, that zone, confluence of multiple supports of Fibonacci, trend line, previous moving average, momentum, changing polarity, all these supports are there. So there is every possibility that it can bounce up from here. You cannot rule that out, but as of now the charts are saying it's bearish and lagging the price action, lower low new, and then trying to find a bottom for the next reversal from after finding a bottom for the new lower low. Right? We don't know whether today's lower low is low or not. So that's it. Levels remains the same, almost 18,000, 18,070, 17,551, 959. That zone is a routing number for the natural retracement levels and all that. It's resistance first, 18,142, and after 18,262 resistance after that. 18,262 above would be a one new higher low. Lower low is breached, and then there is a possibility that it can move further up. And if 475 is also clear, then we can say we are back, and then we have trouble as I said. So 17,825 could be support still. Fibonacci 50 retracement is at levels 17,760 One, the new swing low would be support after that, then 17,640 would be same low after that, 17,500 also after that, 17,400, all that is support zones. And 50, 42, 231, 42, 363 would be resistance upside. 42, 566 would be from 1923 resistance upside. After that, 41, 836 would be support downside, and 41, 587 would be Fibonacci 38 support downside. Right. So making all of these levels, these are the previous swing lows or Fibonacci levels that's identified. For the bands, we are seeing that it's bearishness. Momentum is sideways and falling in both indices. There is a bullish divergence possibility still there. It's not reached. That can, you see that there is a bullish divergence on the charts. Right, from here to here, where the momentum is rising and the price is falling. So that possibility is there. Volatility divergence also could be there, creating a W pattern breakout possibility. That is also along with the support zone. Confluence of support zones is all in favor of the bullish still until it falls back into the trendline channel below this. Fibonacci 61 is the close below the Fibonacci 61 retracement below 17,500. Until then, you still have a hope. So it fixes cool off, close flat 15.27. That's what it is. Short build-up is what happened obviously, and the futures open interest. And options OI would not be relevant for the Jan 19th because tomorrow would be the first time it gets actively traded. But still, for reference, you can make a note: 7,900 and 19,000 is the highest put and call rating on Nifty, and 42,000 is where the highest put and call rating is seen on Banknifty. 0.66 is the put call ratio. 0.69 is not bullish enough, I would say. It's for 0.69 is for Banknifty. Right. Let's move on and see what happened. IT and auto close green actually. Right. Not much, but 0.43 and 1.13 percentage of green has happened only in these two industrial sectors, but FMCG is closed 0.36 red and others are closed red and green but flat. All sectors are having sideways moment, none of them are bearish yet. So sector across the sector selling has not happened. Only heavyweight selling has happened. So look at this. Lions, ICC, Bank of America, all of them fall more than 1. Lions fall 2%, Kodak more than 1%, and ICC Bank greater than 0.5%. So they all closed red. And HTC Bank, HTC and Infi and TCS closed green. TCS is kind of flat only, but it's Infi did 0.64%. So Infi, Kodak and ICC Bank are the two. And Reliance also here. Forgot to add that. They all have momentum in the bearish zones in the short term perspective. So all the others are having sideways momentum. So this Infi, ICC Bank, Kodak and heavyweights, heavy selling is happening from the FI side of that, and then that's the reason. Institutional selling, look at this, 1662 crores of selling again, another big selling day. That is the 15th day of continuous selling is what FIs. FIs are dumping billions of dollars outside. DAs are trying to cope up with that and balancing it by buying 2,000 crores. That's a big fight that is happening. That's why you have hammers and long VIXs, big moves and all those things that then again buying, then again selling, all this is happening because it's big fight. There is big pull out of money that is happening from the FIs and the DAs are trying to cope up with that. Crude oil is actually rising and 1% up, spiking up in the trend line channel as we know, which is trouble. If it spikes above the 80, 90 again, but there is a possibility it can move up, right? So as of now it's okay, still in the sideways momentum. Dollar is cooled up a little bit, 103 below, 2.29, 2.9 is good. It's sideways momentum from the bullish zones. It has come to. It's good, but not good enough because rupee is still weak, 81.4. Rupee also is falling in red, and then not bad. Look at this USD INR currency pair rupee. Right, good sell-off has happened. It's falling and it's the bearish momentum on the daily charts. That's good. Dollar also has cooled off and broken the major support zone, which is good. So dollar is falling and rupee is slightly appreciating, which is good. Oil is spiking up but not above the danger level, which is also okay. So commodities in the currency seems to be okay. Gold is spiking up like anything. 70% of what has happened so far. It's near a resistance zone. It's in the bullish momentum. So yeah, gold spikes normally when the market falls. So it serves its purpose as a hedging instrument. SGX is green, US index is green, but US index is in ascending wedge. and you are to be closely watching that for weak moves to happen. Let's look at the US indices and then try to understand where we are. This is the Dow Jones. Let's look at the weekly charts and see where we are. So descending wedge, and it's on the top of that, trying to break out. It has been 3-4 days of good up moves happened on Dow Jones, and Nasdaq also has gained good solid green candle, and S&P 500 also has gained solid. So everything is on the resistance zone, and all eyes whether it will be able to break out or not. Right. So if that happens, then it's good. And now markets will follow that. So major evidence that there is a CPI data, inflation data is coming in India and US. There is US jobs data that is coming today. So all this volatility can be expected in the USDX tomorrow in our markets accordingly. Right. So some bounce up from here could be expected if this green sustains till tomorrow pre-market. Right. Until then, you have short trading opportunities for tomorrow if you get the signals right. Atul Limited is a stock. Weekly chart surface is showing that the descending wedge breakdown can happen and then could be rewarding till the next support zone. Right. Slowly let it trail after that. Right. So that's a short call, and keep the stop losses very close to the entry candles high. Right. It could be rewarding. Right. Trail it whenever the supports come on the downside. Right. And no stop losses above the entry candle weekly candles high. Right. Small losses are fine, but big losses are dangerous. So as soon as you're in profit, then trail your stop loss to the next support zone. The entry has to be not on weekly, it has to be on a very lower time frame, so 1 hour or daily. Right. So other limited short side, Bajaj Finance, not Bajaj Finance, Bajaj FinServ is what today speak. That's also beautiful breakout, inverted head and shoulders failed. It's a descending wedge, and then it seems to be going down towards the bottom of the wedge, and then rewarding support is breached. As soon as today's low is breached, then you can make an entry, and it can be rewarding stop losses right above the previous candle's high. Momentum and trend is bearish for momentum and the trend both are in the bear zones for the weak, medium term as well as short term on both these stocks. That's why it is picked. Atul Limited, Bajaj Finance, short side trades, opportunity swing trades, few days. That's all. Stock market. After we have studied all this, let's summarize what happened today. Today it was flat close. Market is weak and it's sliding down slowly. We lost the previous swing low and lower price action. It's bearish. Or and in between that it's volatile also. There is buying coming from the DIs and then by Fyers sell DIs buy. So that volatility is there in the middle of the market, and last several days it has been there. But finally, I have a flash close and so crucial zone still. Right? But given the moving averages, price resisting below that and pulling the bands down, downside bias, expansion on downside. Momentum sideways trend bearish. If I selling rupee, we can use markets at critical breakout zone on the top of descending wedge and all that. Market will still remains mildly bearish, no change. It has been the same for several days now. It's long time since bullishness is seen the charts at all. So VIX is above 15, so it's no longer the lower regime, we cannot say. And if it's above 20, then stay out of the trade is the best trade. And hedge your positions always with option strategies if you're trading derivatives. Or net positions can wipe out your capital if it is not hedged. So levels to watch out is 7,500, 18,300 on the Nifty, 41,500, 43,000 on the Banknifty, right? So play safe, right? And protect your capitals with hedging strategies and options where you get rental incomes. Check out the playlist for such trading strategies, for like covered calls and cash market puts, etc. Right? That's how you protect your long-term quality investments trades. Right? Whenever gold falls down, and that's it. My view is mild bearish. I hope this analysis study has given you more clarity. If it has helped you some way for a better trade plan for the next day, then consider hitting the like button, share, subscribe if you're not done, and share to your friends and colleagues. Leave your feedbacks, comments so that we can improve. But more important, please share to our friends and subscribe if you're not. And that's the only way to keep us motivated to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.